Good morning, everybody, and welcome to the Top 5 Reasons Community Associations Need Crime Insurance webinar. I'm your host, Sherry Branson, Marketing Manager for Kevin Davis Insurance. I did want to mention that I record all of the webinars and I put them on our website, which is kdisonline.com, where you can listen to today's webinar as well as all of our past webinars by just going to our website. And if you have any questions during today's session, if you notice on the toolbar, you'll see a questions tab. Type your questions in there, and then at the end of the session, we'll be doing a Q&A to answer your questions. One other thing, there's also a handouts tab where you can download today's PowerPoint and also a crime insurance claims flyer, which I've uploaded. So you can just click on that tab and download the handouts. So thanks for joining us, everybody, today. And I'm now joined by Kevin Davis, founder of Kevin Davis Insurance. Good morning, Kevin. And Kevin joins me from Los Angeles. Hey, Kevin, how's it going? Has it stopped raining out there in LA?
Yesterday it was pouring out here, lightning and thunder, something we haven't seen ever. So we never have lightning and thunderstorms. No, the weather's been pretty bad. It's been, okay, I'm gonna say it's been cold out here because I'm in LA, but it's been in a 70, maybe.
A little unusual weather.
We haven't seen 80 this year, but maybe 2 days. So yeah, I'm disappointed right now.
Yeah, it's an El Nino year. I've heard that you're definitely making up for all that, the lack of rain the past few years. You guys have just been getting tons of rain. And for it to rain in May, that's really late.
It is, really is. I agree.
And Kevin, we have a very special guest joining us today.
Yes, Ted, right?
Yes, hello. Welcome, everyone.
Yes, we're joined by Ted Lansdale, Senior Claim Counsel with Travelers Insurance. Good morning, Ted. And Ted joins us from the East Coast. Kevin's in California, and I'm in Texas, so we have 3 time zones going.
Sorry. Anyway, listen, I thank you guys for having me. I've been handling crime claims for a number of years now, and I always like to be able to talk to insureds when there isn't a claim pending. I feel like that's where folks really get the most out of it. And you know, listen, in terms of weather, I mean, we've hit 70 maybe twice all year. So the rule in my house is it's got to be above 40 to wear shorts. So that's kind of life in New England.
Yes, that's right. The Northeast. Yeah. Spring always comes a little bit late there. Great.
That's right.
Yeah, and Kevin, we have a very exciting webinar today. We're going to talk about crime insurance and claims, et cetera, and really talk about the trends that are happening.
Yeah, you know what? This is going to be a very interesting webinar today because this is like the first time we actually had a claims examiner who handles HOA claims. Now, he doesn't handle everything. He specializes in HOA claims, and we're looking forward to it. We're going to go into a lot of different information about what's new, what's happening out there in community associations with crime claims. Do they really need the coverage? What kind of coverage do they need? So we're going to really cover a lot of different issues there today. So Cheryl, I'm looking forward to it. It's going to be a very, very, probably one of the more informative webinars we've done in a while.
Great, fantastic. Hope everybody enjoys it. I'll be back later.
Okay. All right, so let's get started, Ted. First, we talk about 5 things that make it right, that really has a difficulty in why you need a crime insurance policy. So the first one is that due to the rise of these new type of claims made against community associations, they really need a coverage. When I said new type of claims, what I'm talking about from a historical point of view, when we talked about crime for any kind of crime, we talked about employee dishonesty. That means an employee versus employer. Now we're seeing a rash of claims involving non-employment kind of crime claims. So what are your thoughts on it? Let's start with you. Go ahead.
Yeah, I think, right, historically speaking, it was always employee theft or employee dishonesty was always the driver of claims. And what we're seeing lately, listen, those things are always there, they're always going to be there, and they will always form the bulk of claims that we're seeing. However, the new sort of claims that we're seeing, Kevin, are things like social engineering, where you have outside parties, fraudsters, people you've never even dealt with who are pretending to be people that you know, like a vendor or probably not a client if you're an HOA, or pretending to be an employee or a board member, and they're tricking someone into paying the wrong person. And that was the sort of claim that you didn't really see. I mean, it didn't really 10 years ago that didn't exist. Maybe 7 years ago it was theoretical, and it was only in the past few years where it's actually become a thing, so to speak. And here's something interesting. I sat in on a meeting. We had a local FBI field agent visit our Hartford office, and he was talking to us, and he said that the growth in claims involving this sort of social engineering or crime has grown 1,100% since last year. And the
Wow.
amount of money lost, this was what I heard yesterday, the amount of money lost has gone up 3,300% in just a year.
Mm.
And what was fascinating about that is that he was saying that most of these are not even being reported. Most people don't even know to report those. So when you talk about new type of crime claims, it's this sort of internet or email compromise, social engineering, goes by a lot of different names. That's really what we're seeing lately as a new type of claim.
Wow. And again, I mean, a lot of these claims are coming from the technology that's coming in. Technology has been invented so that we can have ease of doing business, convenience. And with that convenience comes a whole opportunity for people to get in there and find ways to steal money from us, to trick us, to fool us. And again, I think this is a start. The social engineering, again, is something that's brand new. We've been talking about for a while. But it's going to be a start of something that we're going to really have to get our hands around in order to really protect the funds of the Community Association Board of Directors.
Absolutely. And you mentioned about, ease of doing business, right? And that's where it, listen, the easiest way to stop these things is to double or triple check every single transaction. But we know that's not really practical, right? You cannot, things would grind to a halt. So that's where the insurance comes in and saying, listen, we obviously want you guys to not be reckless, but we realize that there's a risk out there in doing business, and you could hedge against that risk by taking out an insurance policy to cover that risk in the unfortunate or unlikely event that you do get tricked. So it's kind of a nice product to see how that's how this was a problem maybe 7 years ago, and then a few years later the insurance world comes out with a product to kind of hedge against that risk. I think it's a good story.
Yeah, and one of the big problems out there right now is that most of the people that we do business with in our industry, community associations, have no idea social engineering is an issue, even though they've probably been impacted for several years now, and they had no idea what it is, or have they even been impacted or not yet. So to me, two there, Ted, is that the lack of experience when handling funds. You look at the board directors, the people handling the money, they either find somebody to handle the accounting part of it, the treasurer, who have no idea what it's being about, or they give it all over to the property management company and tell them to do it without any really oversight. So I think the problem right now in this lack of experience is a lack of oversight. Is that what you're saying also?
Yeah, pretty much, particularly with HOAs, is that, a lot of the claims I've had, and I don't think this goes for every HOA or association, but most of them, if you look at who's on the board, these are folks who are trying to do a good thing for their neighbors. They want to be involved in their communities, and they are really trying to make wherever they're living a better place to live, and they're volunteering. They're not necessarily financial experts. So
Mm-hmm.
that's what sets these associations apart from companies, where if you're a corporation, you got a strong motive to look at every penny that goes out the door, versus if you're an association, candidly, this is not your day job. So you're going to farm the work out to someone else, and you're going to be relying on them, oftentimes a property manager, to be making right decisions. And if you don't have some sort of checks and balances in place, or accounting controls, you're kind of in an environment that's kind of ripe for fraud. And again, that's where the insurance comes in to kind of hedge against that risk, because it is this lack of experience where certain questions aren't being asked. But that's just kind of a risk that's endemic to associations. And we see that quite often. That's the pattern that we see in most of our claims, is that there's kind of been some sort of lack of oversight.
Mhm.
Not because that they can't, it's just because it's not really in their nature to be providing that high level of oversight that you would get in other settings.
And what they're doing is they make it really easy for either the manager or a board member to start embezzling funds. Can you give an example of a situation that impacted with a board member embezzled or dishonesty or a loan and collusion from management company?
Yeah, what we would typically see is where there's sometimes it's a board member who's colluding with a property manager, but let me go with a more common one, is where you
Hmm.
just have a property manager and they're going out, and what they will often do is pad the bills, right? So you will get invoices, I don't know, let's say windows are being replaced. You're a condo association in Florida, right? Always replacing windows, they're always leaking. You replace the windows, and the property manager is adding a little extra expense to every invoice that comes in. And he or she may call it a service fee or something, even though that fee was never agreed to. And actually what it really is just straight theft. That's a common example where we see where, unless you have experience dealing with these contractors and you are touching every single invoice and you are involved in the getting every single quote, you're not going to catch it. And so we had, so I'm thinking of the claims that I've handled. I've had several where you have invoices being padded. Other examples are where work is simply, you're being charged for work that was never done and never even contemplated. Work that just wouldn't make sense. But if you sneak those bills in over a period of years, they're going to get missed, especially if you work with folks who are like, handymen or people who are doing lots of different things, where from the title of the invoice, you wouldn't necessarily know what they're doing. And it seems normal because oftentimes, hey, if the amount seems generally in the ballpark, that's going to pass muster.
Hmm. Interesting. So what you're talking about is the board of directors not only have issues with the management company, but you're right. If a roofing contractor or they have just a regular maintenance person can submit other bills for things that they may have purchased, maybe new pool furniture or maybe fix fix the deck. What they do is pad it, or they'll say they bought pool furniture, never bought it. A light bulb.
Yeah, absolutely. Yeah, right. That's what we've seen, and usually it's oftentimes the property manager and not who's the one taking advantage of the system.
Mm-hmm.
Most of the times, it's not the contractor who's actually performing the work. It's someone's
Okay.
intercepting these invoices and just
Mm-hmm.
adding numbers to them when they get passed on to the association.
Yeah, one of the historical claims that we've always had was that the management company bought one box of light bulb and ended up charging like 30 associations for each box. And the question was, we never found out who actually got the real box of light bulbs that was able to submit the claim with. So it's kind of an interesting situation. So I guess you see things like that a lot.
Yeah, I do. And that's where you need to obviously be able to trust your management company, but you need to do a little due diligence when you're picking them, and you need to get some assurances that, hey, you may want to make sure that they've got their own insurance as well to
Mm-hmm.
cover any sort of their own employee dishonesty, or at the very least make sure that your policy that you got will pick up that property manager too.
Mm-hmm. All right, that's good. Okay, all right. So let's go to the next one here. We're talking about, and this is one of the problems I get when it comes to talking to management companies about needing crime insurance. They just don't believe the coverage necessary. First thing they'll say is we trust our employees. They've been working with us for a number of years. They all are they all are PCAM. They're certified. They're the best managers we have. Um, or they say that the employees don't have access to money. I'm the board president and treasurer. We sign off on everything, and nobody else has access. Or the third one, we have excellent internal controls. We don't need crime insurance. So do you hear that also from the
Oh,
people? Yeah, do you hear that?
well, I'll tell you what, I don't think I've ever had a claim where it's been an employee stealing from someone, an association or any other organization, where they've said, you know what, totally figures. If anyone was going to steal from us, it was going
Yeah.
to be Jim down in accounting. Like
Mhm.
you always get the opposite. It's always, we can't believe. It's always the long-time trusted employees who's baking cookies for everyone. Everyone loves her, and it just turns out that, you know what, she's been paying for her kids' college by siphoning money off the top. Um, so, hey, trust is a wonderful thing to have until it's gone.
Mhm.
Um, and then you're kind of left holding the bag, figuring out how did this happen. We see this all the time, and even excellent internal controls. Hey, that's going to help your risk profile. That's probably, you may never need insurance if you have excellent internal controls. Then again, if you've got an employee who's been around there working for you for a while, or someone that you trust, they're going to find a way to circumvent those controls, often just through creating some sort of urgency, some sort of need to bend the rules a little bit. And it'll seem plausible until you start unwinding it. So yeah, that's a real common thing, Kevin, where no one thinks they need the coverage. But like I said, never come across that one where it's like, man, it was
Yeah.
only a matter of time before that dude stole from us.
Interesting. Yeah. Okay. And again, this is what I get hit with so often. And you look at these people, especially now today, when we talk about things like, and we'll talk a little bit next in terms of social engineering, computer crime, funds transfer. It's broader now than it has been. I've been handling crime insurance for since the 80s, really. And it's always been that employee-employer thing, and it's just gotten so broader now. And I agree with you. You're still going to have a situation where that employee is an issue, but boy, it is getting broader. And if you're seeing the social engineering increase that much, it's really going to make a deal in the future. So,
Yeah, yeah,
okay.
absolutely. I agree.
Okay, let's go on to let's talk about coverage right now. Let's talk about the number fourth one there is the biggest problem, and again, you probably see this, is that they don't have the right coverage. At the end of the day, they don't have all the coverage they should have. And we'll talk about each individual coverage, but just give an overall view of inadequate coverage there.
So the thing that you're going to want to make sure is, as you're buying insurance, associations are going to want to work with their agent or a broker to really have that person understand how the business works, right? How is money flowing through there? And more importantly, who is touching the money and whose money is it? And let me back up a little bit, or I'll be a little more specific. You want to make sure that that property manager, right, is going to be considered an employee, because most crime policies are going to have that coverage called employee dishonesty. But when you think about a property manager, by definition, they're not employed by the association. These policies for associations realize that. So you want to make sure that this property manager is added on to your policy as an employee, because that's what they essentially are. And you need some sort of affirmative statement from the carrier saying, yeah, we're going to cover these folks as an employee, right? Because otherwise, this isn't someone that you're compensating directly by salary, and you're not
Mhm.
directing their or controlling their services. If anything, they've met all the definitions, because they truly are, of an independent contractor. So that's where spending a little bit of time as you're going out to purchase the coverage, understanding how it works, and that's where the agency side comes in. They'll be able to help you navigate and make sure. And that's what we always see is, if you're going to have a coverage issue, it's often on who's an employee. Theft, that's another one. It's oftentimes we will have claims where someone is dissatisfied with the work. So you get into a dispute with a contractor or the property manager, and you say, man, that person's doing a bad job. They are stealing from me. They are doing such a bad job. Well, the definition of theft, as we can all see on the screen, it focuses on the intentional, unlawful taking of money. That's usually what it is. So it's got to be unlawful, as opposed to someone just did a bad job. So if someone's doing a bad job, that's not necessarily that they're taking money from you. So that's something that we see sometimes. So you want to be kind of clear as to how the policy defines what a theft is.
And Ted, that's really important because we do see a lot of times when the boards of directors believe that the manager is robbing them blind and stealing everything and overcharging them and kickbacks and everything like that. And so I guess you do see a number of claims where they said a theft occurred, but until you really identify what definition of theft means, they really have a problem with it. I guess the question is, do they have a problem with it?
I mean, they could. I mean, you
Mhm.
mean with coverage? Yeah, you certainly could because, these aren't essentially faithful performance bonds where,
Mhm.
someone's going to do this job 100% right all the time. So the key phrase when you're thinking of is it a theft, it's got to be an unlawful taking of money. So
Mhm.
someone who fixes your walkway to the to the entrance to the building, and it's not quite as good as you'd like it. Well, that's really more of a civil matter. That's not really a theft so
Yeah,
much.
exactly.
So
Mhm.
so we see some of those, not a whole lot, but that's every once in a while those come in.
Mhm. Mhm. All right, so when we're talking about crime insurance, the first thing is the employee dishonesty coverage. You have to make sure, and Ted's right, the key here is at who is an employee. Because you look at, well, it's two things, and Ted, we haven't talked about the other one, is you have to add the management company on there because they're not compensated by wages, salary, commission. But guess what? Neither are volunteers. So we have to extend coverage to also to the volunteers because they're not employees, they're not paid.
Right. Yeah, right. And that's where you got to know what is that definition? How is employee defined? Um, and then line that up against with how you work with who are the folks handling and working with money or just who are members of your organization. Line them up against the definition of employee and see where that all falls out.
Mhm. That's true. It makes sense. So the key coverage when you're talking about crime right now is employee dishonesty. We'll move on to the next coverage. These are the two coverage right now that we're starting to see more and more is computer crime and funds transfer coverage. So let's, Ted, talk a little about the computer crime. Can you explain that to people? Because people really are confused in terms of
Yeah,
what exactly a computer crime loss is.
yeah, absolutely. So on its face, it seems, computer crime, funds transfer fraud. Most people would think anytime a computer's involved or anytime a wire's going out, one of these is going to be triggered. And I get why people say that. However, these policies are 30 something pages for a reason. And the key things to know about here, these types of coverages are essentially there to cover you where someone hacks into your computer network, takes control of it, and here's where the key is, Kevin. They are wiring money or sending out instructions from your computer, either to your bank or to other people, without your knowledge.
Mhm.
And that's essentially what computer crime and funds transfer fraud involve. Unauthorized entry or access to your network, and someone is um, sending directions out from your network without your knowledge. And the definitions are a little. There's some words that I'm glossing over, but in general, that's what it is. And to go back to kind of what we were talking about earlier, these were claims that we didn't see very often, and we're
Mhm.
starting to see more and more along with social engineering. Although social engineering is outpacing these by miles.
Well, Ted, let's go into social engineering because that's the one that's really is when we talk about the computer losses, you're talking about computer theft, funds transfer, which is unauthorized and without their knowledge. When we talk about social engineering, the key there is that they have the knowledge. So can you talk about that a little bit?
Yeah, so if computer fraud and funds transfer fraud involve situations where the insured didn't know that the money was going out, the association didn't know that someone was in their system doing this. Social engineering fraud's a little different in that the money's going out. The key difference here is that, and you've been tricked. And that's where social engineering fraud comes in, is where someone's going to pretend to be, as we can see at the bottom of the slide, a vendor, a client, an employee, authorized person, think board member there. Someone's going to be one of these four people, and these are people that you should ordinarily be able to trust. So a fraudster is going to pretend to be them, and they're going to trick someone into sending money to the wrong person. And that's the distinction between these three types of coverage.
And this is important for everybody listening because, again, social engineering did not exist several years ago. The coverage didn't exist. And right now, it's only a handful of carriers include social engineering on their crime policy. We happen to be one. Not too many do. So you have to check your crime. Whoever you're at your crime with, go back and find out, do you have social engineering coverage? Because like Ted said, it is the fastest growing area of claims and will continue to be, because again, it is people who work, people who, especially property managers, their job is to be compassionate. People who are volunteering are compassionate, so they trust. And when you trust, and somebody sends you a bill or somebody sends you an email that says, please send this to my new routing number or to my new bank number, that is probably your biggest clue. Do you agree with that, Ted?
Yeah, it is. That's usually a tip off that, whenever there's been a change in routing instructions, you should, alarms should start going off. And you should, at the outset, as a good business practice, have a number, an agreed upon number. So know your vendor's contact info, because oftentimes the fraudsters will say, hey, you could reach me, my number's changed too. So you call them at the number, and you're not actually calling the contractor, you're calling the bad guy.
Good, good. Okay, so let's move on to the other crime coverages available and talk a little about these 4 or 5 coverages. You got premise and transit, forgery, alteration, money order, counterfeit currency, and claims. So just kind of give a little overview of those coverages.
Yeah, sure. So on premises and in transit, those are where someone's going to come in and physically remove money or property from the premises or while it's in transit, such as in a messenger. Probably coverages that are there, always been part of a traditional crime policy. You don't see a whole lot of claim activity. Probably do a little bit on premises. Forgery or alteration is where you have checks are being forged. Someone takes a check from the association and they forge a board member's name, signature, or an authorized signer, and then money's going out the door. Similar with money orders or counterfeit money, where you have mistakenly accepted counterfeit money orders or money. The last one, claim expense, is actually kind of a nice thing, where it is coverage that is there to help you investigate to determine the extent and the amount of the loss. So if there is an otherwise covered claim, you could get claim expense to kind of defray those costs, such as you may have needed a CPA or some sort of bookkeeper to help calculate the loss, or a lawyer to help investigate the loss. So if we are finding coverage on another insuring agreement, claim expense could kick in to kind of help defray some of the costs that you've incurred to investigate the loss.
All right, good. Yeah, these are the coverages historically. It's always been on the crime: premise and transit, forgery, alteration, money orders. And I would suspect forgery and alteration and money orders and counterfeit currencies, probably you see more claims now than you have historically, haven't you? Because of
probably
technology.
with forgery. Yeah, you're starting to see a little bit more with forgery claims. There's been anecdotally, there seems like there's been an uptick, simply because if you think about the number of signatures that are available online, it's easy to kind of copy them now. Think about anytime anyone's ever purchased property or signed a mortgage note, that's going to be at some sort of registry of deeds, and that's available online. Pretty easy to copy signatures now. Those are freely available.
Wow, you just scared me. Okay, so let's go to the last slide here, because we got some questions out there coming in. I'm watching the questions come in. All right, this is why the one thing is why, claims being denied. That's the one thing you want to stop, is making sure that the people who are listening, we don't want to give them a declination. We want to make sure that they do the right things that need to be done. And I guess we start with the application, because when we look at the application and we fill out a complete application, one of the issues we see is the management company's not named, or they say 0 employees and they have 5 employees, or they have other things on it, or there's a separation of duties, but they say they are. Can you talk about the application a little bit, Ted?
Yeah, so the application is really representations and warranties that an insured's making, saying, hey, this is the state of our association, this is how we do things. And and a carrier is going to write a policy based on the representations that are being made. So sometimes if an application is incorrect or it's been misleading, that could give grounds for a declination or even just a rescission of the policy. So, but there are certainly other issues that come up far more often. You think third-party coverage. So a crime policy only covers your losses. So if someone has slipped or hurt themselves, or in the pool, and then the association gets sued, there is no defense coverage. That is a different sort of coverage. So that's important to note. And then also, if you have folks who you know have been stealing from you, yet you still hire them, the policy essentially terminates. There are some terms and conditions there, but the policy can terminate as to those people with the idea that, listen, we don't want to insure known thieves who have been actively stealing from you. And so that's why you sometimes see claims being denied. And we touched on the bigger one, Kevin, which was the management company stealing from you, and you represented on the application and told us that you didn't want the management company covered. And then here we are, and we got a big claim from the management because of the management company.
One issue when I talk about third-party coverage is more of you have a high-rise condo, let's say in New York City. You have a doorman, and then all of a sudden the doorman goes up into somebody's unit and they say things are missing. And they blame it on the door person. And we see that a lot. The third party we're talking about is they are not legally liable for the things that's in there. But do you actually see where a door person or a the janitor or somebody who works in that community association who has access to the people's individuals' units?
Oh, I see.
That's what I mean, yes.
Oh, right, certainly, where the items being stolen are not the associations. Right. Yes, that could be. If you do not have the what we would call the A3 coverage or the third party or theft of client property coverage, yeah, potentially that is a denial, certainly.
And that's one of the areas that we see is that, again, when they usually they always blame that door person or the janitor of stuff missing in the unit. So they have to make sure if they're interested, because the reality is that third party coverage is covered under their HO6 policy anyway, so they're really not necessary. But I guess my point is that the association not legally liable for the things that are inside individuals' units. I guess that's my point there.
Right. Yep. Yep. That's a good one. Well taken.
Any other things we're talking about in terms of claims being denied?
The big one is social engineering. We've been socially engineered and we didn't have the coverage, and those are always kind of heartbreaking because the coverage is out there, or it was declined, and then because you didn't know what social engineering was, well, no one knows what it is until it happens to you.
Yeah. When I put inadequate limits, what I was really addressing there was a situation where in other words, most of these losses, they will say we've lost our reserve account, which is $100,000. But it's hard to prove that. And I was saying in associations it's harder to prove than anywhere else because of record keeping.
Yes, that is always a problem where the proof just simply isn't there. I could think of a number of claims where everyone's telling me that this was a theft. I've met with boards, frequently on a big claim. I will go out and meet them, and then you ask, okay, show me some invoices, show me where you've paid these people, show me some records, and sometimes they're just not there. Because again, sometimes you have volunteers and they're not paying attention, or there's or someone's trying to fool them. So that could be a reason for a declination.
Okay, all right. Let's move on to question and answers. We got a few more minutes here. Let's get some of these questions. Sherry, are you there?
I'm here. Here, everybody. Hi.
Yeah.
Great webinar. Lots of great information, and we have some questions that have come in, Kevin and Ted. I have a question here from Patsy. Patsy would like to know, hi, do you contact the authorities and press charges when you find out about indiscretions? Does the value of the theft have to cross a threshold? Interesting question.
Yeah, so the policy does not require that the association file a police report. It's always helpful if it is, if it truly has been a theft. I think everyone would be grateful if the police are involved, and it's probably what should be done, but there is no requirement that the police be notified. Travelers will not notify. Really doesn't have standing to file a police report on someone else's behalf. And then, Sherry, remind me the second half of the question. Oh, the threshold.
Yes, she says, does the value of theft have to cross a threshold?
Let me go back to that first question. The first question about do you have to, historically, and some crime policies still have arrest and conviction clauses in them, where the policy is voided. There's no coverage under there unless you do file a police report and there's a arrest and a conviction. So historically, that's the way it used to be, and maybe policies out there may still have arrest and conviction clause. So that's kind of where that question came from.
Okay. And then the second part is, does the value of the theft have to cross a certain threshold?
Well, typically a policy is going to have what's known as a retention or a deductible, and so that might be a threshold that has to be crossed. Sometimes I still get notices of something that's below the threshold or that deductible. There's probably little for me to do on those claims, but generally speaking, yes, it would make sense once it crosses that threshold. But oftentimes you may not know, right? You may be aware of a loss, but you just don't know the extent. And that's very common. So I would recommend talking to your agent to see if it makes sense to put us on notice. But I think probably when in doubt, notify is probably a good rule of thumb.
Absolutely. It could have been going on for years and they may not know that. So that's the other side of that. Great. And another question from Catherine. Thank you, Catherine. She asked a question about management companies. I know we talked about how important coverage for management companies is. She says that we see a lot of management companies that decline coverage for theft of their clients, the HOAs. And can you talk about the importance a little bit more about why it's important for management companies to carry both employee theft and employee theft of client property?
So it would be helpful. It would be helpful for the association. So I guess there's kind of two parts. You could look at this from two different sides. If you're the association, you'd want to make sure that, or at least consider, adding the property manager as an employee or somehow through some other mechanism to your policy. So in case that there is some dishonesty, that they are covered, because as we mentioned, they do not fall within the definition of an employee most of the time. You may want to also ensure that they have their own coverage as well, perhaps for, on the E&O and errors and omission, or some sort of theft of employee coverage as well, because having additional coverage usually will work to your benefit. And I think having a property manager who's willing to do that would probably be a good indication that they would be, that they take it seriously. Oftentimes, in terms of theft, it helps to have extra limits. And if this is a theft that's been going on for years, that has only recently been discovered, it could sometimes be a lot larger than anyone would ever imagine. So having additional limits is always a good thing.
I have a question for you, Ted, too, and I think it goes into the question they're asking. You have $1 million property management crime policy. All of a sudden, you have a manager there who embezzles the reserve account of several homeowner associations. Those homeowner associations' funds are not management company's funds.
Right.
What would you do?
So you would hope that the management company had a policy that would cover client property or funds. And if they don't, you would hope that that property manager would be on your policy, where you could say, yes, we treat them as an employee, they were stealing funds, and you could leak them back. And you would try to look for coverage there.
That's important, because that's where I think that we're getting at. So what's happening now is that most of the management companies say they have $1 million crime policy. That $1 million crime policy only protects $1 million of the management company's funds. It has nothing to do with the individual association's funds, correct?
That's right. If it is just a first party policy, hey, it's kind of nice that they're telling you that, but it's almost like telling someone like, hey, I've got a great new car, but you're never going to be able to drive it because it's not yours. So
okay.
Yeah, the devil's gonna be the details, and that's why if you pay a little bit of attention up front, know how the policies work, you could avoid a lot of headache down the road.
Yep, great question. That was a great question.
Yeah, I like that one.
Sure.
Great. Fantastic. Yes, we have a couple more.
Okay.
Linda would like to know, which part of the crime policy is the social engineering type of loss covered?
Usually, just thinking of the form that I handle, it's an endorsement to the policy. An endorsement is nothing more than, as folks, probably most people on the call know, but an endorsement is just an addition to the base policy. So if you were to look at the traveler's base form, you wouldn't see social engineering, but it is being added as an endorsement, which is tacked on to the policy. So it's its own insuring agreement.
Great, fantastic. And the last question that I have is from Rose B. Thank you very much, Rose. Is the crime application warranted then?
Oh, Kevin, you might know better than I do.
Well, I mean, I think we kind of addressed the application part of it. Again, what we're doing when we underwrite is to make sure the information in there is accurate. And so if the applicant comes and says no management company in there, then and a claim comes in, and then there's no coverage for the management company. If you say there's 0 employees and then there's 10 or 15 employees, it's not so much as a warranty, but you have the responsibility to fill the application the best of your ability. It's not like a D&O policy, which you warrant certain things. It doesn't operate that way, but you have to be as accurate as possible to make sure that when that claim comes in, coverage is provided. Because I'm quite sure if Ted gets an application and says 0 employees, he's looking at a place that has 30 or 40 employees, Ted would come back to me and say, we have a problem with this account, and let me ask you, Ted, will we come back and actually deny based on that situation?
I think what we'd have to it depends. It depends. So not always, it's going to get complicated. And that's where, so at best, the claim will get paid. At worst, it won't. But what's almost a guarantee is what's going to happen is things are going to take a little bit longer. There's more stuff to untangle there than had the application been correct. So that's right. And I think I may have misspoken when I said you're making a warranty on that application. I still had my kind of D&O hat on, but you're right. They have to be at least answered truthfully and accurately, with the idea that we all know things change, as of course.
Exactly. They could fill the application out 5 years ago, 0 employees, and now they can have 10. So they fill out the application like every 6 years or something like that. So that's a good point. Good point.
Right.
So, okay.
Great. Fantastic. Well, thank you, Kevin, and thank you, Ted, for a great webinar. Lots of great information. And I did want to mention one more time that I record all of the webinars. I put them on our website, which is kdisonline.com. So please visit our website. You can listen to today's webinar and all of our past webinars. And I have handouts in the Handouts tab. You can click on that tab. You can get today's PowerPoint, and you can also get a crime claims flyer, which gives you crime claims examples. And thank you, everybody, for joining us. Please join us in June as we do another webinar on everything you need to know about buying insurance for high-rise condo associations. Have a great afternoon. Thanks.
Thanks a lot. Take care.
Thanks, folks.
Okay, thanks a lot, Ted.
Yep. See you, Kevin. See you, Sherry.
Take care. Bye, Ted.